Is a yield now a competition for a dividend? I mean, that's question 101, isn't it?
I don't think quite yet, particularly in the U.S., where we're going to see, I think, significant increase in payouts as a result of the tax windfall. But we do have to ask ourselves this question: is there a level at which rates compete with dividend payments?
There's a past, Kate Moore, where we look at Dow Transports, Dow Utilities, Dow Industrials. Let's go to utilities as the yield proxy. What did Dow Utilities or S&P Utilities tell you right now?
Well, I think what you're seeing from price performance is that, what's going to cushion you in the next sell-off, especially if it's driven by higher rates or rapid repricing in the term premium, is not what cushioned you over the last, 5 or 10 years as people were hiding in some safe haven bond proxies throughout the post-financial crisis equity market. And so I think people have to really rethink what safety means in a portfolio, and that some of these higher dividend-paying stocks that don't have the ability to keep up with inflation, don't have pricing power, and don't have really strong growth stories on their own are not going to make great parts of your portfolio.
Okay, Kate, where do you see the 10-year yield going in the U.S.? And is there a danger that if it touches 3% and then goes back down, it brings a lot of volatility with it?
I think that the speed of the rise in rates is really what we have to worry about in equity markets. I mean, a slow grind higher is something we're all kind of expecting. I think we expected that the strong growth we had globally and the sustained global economic expansion would actually lead to higher rates sooner rather than today. And, what I'm watching very closely is whether or not companies change the way they're thinking about funding themselves, or if there's a real shift towards equity away from debt in terms of capital.
Okay, the chart here, we've shown this chart a million times since we blew up 15 days ago. Where were you 15 days ago to help us out here? Down we go with the Dow. This is a little deceptive chart with the 1929 and 1987% changes. Here's 1987. I can do that. It's my John Madden skill. 1987 down there. And we've come down to this correction level where we're nudging along. Do you care about this? And this is really important in investing versus speculating.
Yeah.
Do you care about the zeitgeist?
Yeah, you have to sort of care. But, against that backdrop of the market softening and volatility rising, we had awesome earnings numbers, extremely strong forward guidance from companies, really solid economic data. The macro and the fundamentals were in place. And what this little sell-off did actually was take down multiples a little bit and actually provide investors who have a longer-term view an opportunity to buy their high-quality stuff.